Welcome to the B.F. Anderson Technical Report for October the 7th. Last couple of weeks we've been talking about demographics, and I really want to emphasize again that in the long run, the demographic studies really make it pretty darn clear that we are probably going to be in a bull market for a while. Now, there's going to be corrections and pullbacks along the way, so we're going to talk about that. So let's just get into the program here. Now, I did want to point out also that as of recently, the percent of equities as part of the percent of household net worth is hitting a new high. So is this because the millennials are coming on or whatever it is? I'm just letting you know that this is really becoming a very serious portion of most people's assets. So let's just get right into the charts. As you can see here, the Nasdaq has pulled back. This is a correction at this point. I will tell you when I think it's turning into a bear market. We're just not there yet, or if we will even get there. Hopefully we don't. But the point is, the Nasdaq did peak back here. We got a break of the 10-day moving average. Then we basically got the violation right in here, and it's been pretty much in a downtrend ever since. So the Nasdaq is now in a downtrend. Now, however, if we look at it on a weekly basis, we're still in a bull market, because as long as the Nasdaq and the S&P stay above the 35-week moving average for 2 weeks, that's the indicator. Now, the mid caps, as you can see here, here's the 50-day moving average. We've broken down below it. Here's your 200-day moving average, kind of trying to hold there, but moving sideways at best. Here's the New York Composite, same story, has broken below the 50-day, moving sideways. Here's the S&P 500, 600 small caps. Now, the small caps are actually holding up the best right now, but they've been dead as a doornail for so long that maybe that's just the way it should be. But anyway, moving pretty much sideways, holding above the 50 days. So that's the main difference. Here's the S&P 500. We've broken below the 50-day, just like the Nasdaq. We got the violation in here. Basically in a downtrend, however, holding above the 200-day, but has broken below the 50-day. Again, on the 2-week basis, on the 1-week basis, the 35-week moving average is continuing to hold. Remember now, if both the Nasdaq and S&P break this line for 2 consecutive weeks, that is definitely going to be a major sell signal. Now, on the aggression index, we are seeing some weakness here. However, I will point out that we did make a low, then we made a high, and then we made a higher high, and we haven't made a lower low yet. So this continues to be in an uptrend, but deteriorating. Now, on the 3 economic indicators, interest rates right now, 1.524, continuing to kind of creep up. Oil continues to be strong. We're seeing a lot of strength in crude oil. A lot of people talking about $100 oil. Here's the financial service stocks, the financial stocks, the banks, etc. Continuing just to kind of move sideways, but popping up a little bit. New lows, too many new lows. We're above 40 a day. We've been above 40 a day for kind of a pretty considerable period of time. This is somewhat of a warning. It's called the leaking boat syndrome. In other words, if everything's looking okay and the new lows are too high, the boat's leaking, is what it's basically saying. Now, remember this indicator is very important. 10-year Treasury yield versus the 3-month Treasury yield. If the 3-month yields less than the 10-year, you get an inversion, which basically means bear market recession. Again, inversion, bear market recession. But right now, we're not seeing any type of inversion. We're currently at a reading of about 1.5, has turned up a little bit. I'm continuing to monitor this indicator. Sentiment, the AAII bull-bear ratio improving somewhat, tried to pop a little bit, but pulling back. The put-call ratio continues to be in greed, very surprising to me. Would like to see it move up in this area. The Russell 2000 Growth ETF continuing to move sideways. Growth stocks are really having a tough time here. The only thing I could say is we have made a higher low here than the prior low. However, we are starting to break down and making a lower low, so doesn't look positive. Junk bonds versus treasury bonds. In other words, if everybody's worried about economic activity, they're going to sell their junk bonds and buy treasury bonds. But so far, it looks like to me the economy is continuing to look somewhat robust. So what is it? Is it inflation, higher interest rates? We don't know. Volatility index, you can see here we did get a spike in rate of change, pulled back, kind of normalized. It's pulling back, somewhat normalizing. I don't see a problem there. Now in the top 5, we're going to see a real emphasis here on energy stocks. This is Continental Resources. Notice the fact that 3 days ago we got pretty much a good spike in volume here. Also, the stock tended to break out of that base. These oil stocks continue to look very strong. Here's Devon Energy, same thing. In fact, you got 2 days in a row above average volume and also what we would call a gap up. Actually, multiple gap ups in here. Skin, the beauty health company, not really familiar with it. Moving somewhat sideways, doesn't really look that good to me. We're not getting any kind of volume signature. However, it makes top 5. Antero Resources. This company is mainly producing gas out of the Marcellus Shale. Anyway, you can see here you're getting humongous volume, buying volume coming in here, and you got a breakout above a base. Continues to hold, continues to hold. Oil stocks are strong. Here's Asana, which is a software company. We got a little bit of a spike in volume here. However, this day here kind of bothers me somewhat. We are somewhat getting a breakout here. Let's just see what happens. Keep an eye on it. So that's it. If you have any questions, please let me know. Thank you very much.